Hello there, this is Miles Pitcher with Superior Lending coming to you this week with our mortgage tip. For the next few weeks, I'm going to be talking about some non-QM loans. I'll explain what that title means, but the first one I want to share with you this week is about bank statement loans. First, here's my contact info on how you can get a hold of me. Just scan that QR code. And then here's where rates are. You see, we had a really nice direction in our chart. Rates were improving. As the charts go up, rates move down. But then we've had quite a lot of volatility, whipsaw action going on, and you can see today's been rough. Rates are still phenomenal. They're great, but inflation concerns is the primary reason that this has taken a turn for the worse. So we'll keep an eye on rates, but they are still fabulous right now. We are still putting our conventional clients into the high twos right now on their purchases. Reminder that we do have a Spanish-speaking member on our team now. We've wanted this for a long time. We're excited to have a licensed loan officer part of my team so that we can help the Spanish community. So what is a non-QM loan? That means a non-qualified mortgage. In short, it means any loan that falls outside the guidelines or traditional mortgages that are Freddie Mac, Fannie Mae, FHA, VA, USDA. Those are your normal qualified mortgages or traditional mortgages. So technically anything even like a jumbo loan is a non-QM loan. So on a bank statement loan, what's the situation that makes sense here? So you've run into these clients. I've run into them. We've seen them all the time. Maybe you're a client like this, in that think of a self-employed borrower who has the ability to write off a lot of expenses on their tax returns. Therefore, they don't pay a ton in income taxes. However, with how much income they show on their taxes, they're unable to qualify for a traditional mortgage. This is where the bank statement loan is a great fit for these clients, because what it looks at is their deposits that they have in their bank accounts to see if the client makes enough money, either in personal or business bank accounts, that can be used as their income to qualify for a mortgage. So some of the requirements, obviously we need bank statements, but we can do them with either 3, 12, 24-month bank statements, and they can be business or personal. I typically look at both business and personal for my clients to see which one will get us the highest income. Obviously, the rates get better the more months of bank statements that you can show. So if you can show 24 months, the rates are a little bit better. Debt ratios are going to be a little bit tighter, 40 to 43%. This depends on credit scores and how much down payment you do. Credit scores need to be usually up over 680. And normally you need at least 20% down. We do have some options for a 10% down. Rates are typically, they're kind of in the 4s and the 5s on these right now. But think about this. Think about a client who wants to buy a home. Their past tax returns show very little income. This is a fabulous way that they can buy a home right now. And maybe that monthly payment's $300 higher than it would have been on a traditional mortgage. Well, if they had to show or said, all right, we'll file our taxes for the next 2 years and show the income we need to qualify, they're going to be paying a lot more in income taxes to show that income versus taking this 4.25 rate and paying a few $100s more every single month. We've done these for a lot of contractors, a lot of landscapers, real estate agents. We do them for primarily self-employed people. But we typically get them in the loan, and then once they have a couple of years of tax returns that show solid income, we refinance them into a traditional mortgage. It's a fabulous tool, especially when you talk to a person who says, yeah, I'd love to buy a home, but I don't show enough income on my tax returns. That should set off an alarm in your head that says, we need to have you evaluated to see if a bank statement loan works for you. And I need to, I don't think I mentioned this. So what we do is we look at the bank statements, we total up the number of deposits and the amount of the deposits that they have coming into their bank accounts. And then the lender will take a percentage of the deposits and count that as their income. So I hope that makes sense. Let me know if you have questions. We love helping our clients understand fees and see options when they're shopping. Have a great rate. I hope you have great rates, and I hope you have a great week. Miles Pitcher, Superior Lending.